So who would get the pink slip first? Tech workers and corporate middle managers, or cashiers? So what's really interesting about this is we have to look at cashiers versus tech workers, for example. We have about the same amount of jobs in both of these industries. The difference between the two is one is a very high paying job, the other one is not. Another difference is one is spread out around the country. So you have cashiers everywhere. You have somebody that needs to pay for something, right? But the tech sector is actually concentrated in a few cities. So you know the usual suspects: San Jose, San Francisco, Silicon Valley, Seattle, Portland, Washington D.C., Raleigh, North Carolina, Baltimore, Boston, Austin. So what happens when tech companies that see their prices go down in their stock price? They see they can't access the IPO market, they can't access the equity market selling shares, and their revenues, they're negative because they're not profitable. So they can't access the bond market so easily. What do they have to do? They have to basically make cuts, stop hiring, so hiring freezes. They have to start laying off, and we're seeing it. So we're seeing Snap and Twitter and Wayfair and a bunch of other companies cutting high-paying corporate jobs and high-paying tech industry jobs. And the last few years, if you haven't noticed, these tech workers bought a lot of homes, and they were able to support higher prices because of their high income. But as these tech workers get laid off, then we have to ask the question: who's going to buy homes if not them? That's going to be difficult. What happens to the homes that they own? Well, if they're not making $250,000 anymore, they go from $250,000 to zero. What happens to their home? They might get in trouble. It's not like they're going to be able to switch jobs easily or become independent contractors, because hey, if everybody's laying off, nobody's hiring. So that's an interesting question. While on the flip side, the cashier, well, they already went through a decade of automation. They've been replaced with self-service cash out systems where you can just scan your stuff. So most of the people that were supposed to be fired in the cashier business have already been fired. Now the question is, will companies invest at higher interest rates in more machines for these people, to lay them off? Probably not, because investment is going to go down in a recession as profitability goes down and the cost of borrowing goes up. So the cashiers are actually in a safer, more secure environment than tech workers. So it's an interesting development, something that we should have seen coming, as we saw the pandemic, where essential workers were very, very important, and everybody else was working from home. Well, if you're working from home and you don't want to come back to the office, and the office is not making any money, you can stay home and try to see if you can pay your mortgage. And that's coming, and you were seeing layoffs. Even companies like Gap, they're not firing the people in their stores because they need them. They're firing 500 people from their corporate office. Those are the high-end jobs that support the high-end home prices. So if more and more white-collar, high-paying jobs get cut, we're gonna see more pressure downward toward in the housing market. So that's inevitable. Some people might say, "Oh, but the dot-com bubble, we didn't see that." Well, dot-com bubble, the tech sector was not as large as it is now. And back then, we didn't have any issues in housing prices versus income. We didn't have the high months of supply in new construction. We were like at 3 months, not 8.1 months. We didn't have super high rates that were still climbing. We had rates that were falling actually. So yeah, .com, it's not gonna, it's not a comparable. So if you live in cities where you have a high concentration of tech workers, you might have some issues in the housing market. And we're already seeing it. San Francisco's down, Seattle's down, Portland's down, Austin, Texas down, Raleigh, North Carolina's down, Washington D.C. is starting to go down as well. One tech-heavy city that we haven't seen much in drops is Boston, but Boston is a little bit more, has an economy that's a little bit more diverse versus San Francisco. Like you go in San Francisco, every other person that you trip over is a VC or a tech CEO or homeless. It's like that's it. That's who you will bump into walking around San Francisco. Everybody's an entrepreneur. Everybody's in tech or homeless, one of the two. So, hold on to your hats. The real estate market is going to get very, very interesting, very, very bumpy. And if you live in those cities with the high tech worker concentration, you might see a lot more price reductions and potentially higher rate of foreclosures.